The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, there's nothing much to report today, boys and girls. Just a few little things like earnings in Amazon, Microsoft, and Google. The stocks are up 10%. That puts the NASDAQ is going to leave a 90-point gap for people that want to buy it up here on the morning, other than if they're in futures, and not many of those stock guys are. So it's going to be very, very interesting. What I'm going to do this morning is go over a bunch of charts here, looking at this, because when you see the news like it is today with this perfect storm, and China just dropped interest rates by 0.5%, which was twice as much as most people were expecting. And I'm sure the reason they did that was because business is already really good, but we'll see. I'm going to go over the four big stocks that are making this big move here that we have going into the market today. And remember, with China dropping interest rates, and we are not going to probably raise rates, someone's going to have to explain to me how Treasury bonds can be going down. Because when Treasury bonds go down, that means that we have higher interest rates. But I know that's the flight to quality story that they always tell us, but we'll have to, be able to see, what's going on with that. I think I've missed that. Excuse me one second. I think I've missed the the buy in the gold. I'd still like to get it down to that 1157 level. The high that we made today in the gold at 1181 was a 61% retracement. Silver actually made a 786 retracement of the whole move up there at 16 and change. So I'm not sure, what's going to be happening with that. Folks, let's go back just a little bit. Let's go back about 6 years ago. We were talking about March 5th. If you'll remember, it was a reverse of a perfect storm. It was Andrew, Katrina, and the big tornadoes all at once. If you remember, the Fed was telling us, Paulson was telling us the world was coming to an end and we had to save everybody. And that was on March the 5th of 2009. Everything was terrible. Now what we have is the exact opposite of that. I mean, in the last 3 days, the market has received a perfect storm. We've had four major earnings. We had McDonald's, Microsoft, Google, and Amazon. And Amazon and Apple hasn't done very much yet, but it probably will. But this is a perfect storm, and we're leaving monster gaps on these charts. And if you're a chartist, go back and look. And we're going to look at some of these. You're going to see even when Google gapped up 100 several months ago, it still came down and filled that gap. So now's not the time to be, wanting to be a buyer, I don't think. I posted in here the New York Stock Exchange chart. Hey, and I'm probably 100% wrong, and it's going to go to 35,000 in the Dow probably, but I'm not going to do it today, I don't think. And, this is what I'm looking at. Now, we are up 8 days in a row here from this last lows that we've had. If you'll notice that I put up the 4-hour chart, and you'll notice that the number of time up versus the time down, the time up in each of the AB leg equals the time up in the CD leg today. But I was really prepared to come in and get ready to sell it if we weren't any higher than where we closed on yesterday. But what happened? The market. The earnings came out of these companies, and the S&P gapped 15. The NASDAQ gapped 90 points. I couldn't believe it when I saw the chart. I was really shocked to see it jump that much. And then when I heard the news, I said, oh, well, if that's the case. Now, remember, folks, most of this is done by four stocks. And we're going to look at those as we go through this morning. In fact, what we'll do is we'll just take a look here at the first one today, and we'll look at Amazon first. And this is a daily on Amazon. And, of course, it's been in an uptrend. There's no question about it. It pulled back to a 61% retracement back here at 482, and now we're going to be trading at around some around 618 to 620 this morning, and that's going to complete a big butterfly pattern with another gap of. Let me see, this gap is going to be from 70. This gap is only going to be about 50 points. If you go back and look at Amazon back in July, it gapped $100, if you remember. And that was the high of the move, and then it came down. It went from 585 all the way down, dropped 130 points. It filled that gap easily, and then it had the big move up. So this is not the time you want to be buying into these gaps. Now, that's just me as a technician, and I probably don't have any idea what I'm doing, but that's just what I can tell you from long time experience. You don't want to get caught in this emotionalism. Okay, now we're going to look at Softy, Microsoft. Here's another one. It's gapping up also, and it's completing that 1, 2, 3. All of these are completing the 1, 2, 3, 4, 5 expanding triangles. All 4 of these stocks that I'm going over. But this is Microsoft. As you can see, we're going to be trading up around 53 today, leaving a monster gap. Also, Microsoft does not have any gaps in its chart. If you go back and look, it really is such a heavily traded stock that you just don't find gaps. The next one we're going to look at is one of my favorites, because this is the one that if you want to sell something today, folks, I know you're going to find this one hard to believe, but the one to sell would be McDonald's. You got to put your stop in. I don't know where it's trading pre-market, but we are the 1.618 is right where it closed, right around 111. It has the 1, 2, 3, 4, 5 expanding triangle over the last 7 or 8 months. It's made a big 1.414 expansion on the monthly charts. So there's a lot of things, and this huge gap here. Again, go look at the chart, long-term chart on McDonald's, and you're not going to see any gaps. In fact, look at all those charts. Like Jim Twentyman says, defy human nature. Do the work yourself. And sure, these markets they can go straight up forever, and I can certainly understand that. But buying into a gap like this is not very smart. The other thing about McDonald's yesterday, it had the second highest volume ever. So everybody wanted that stock, and that's the old please let me in. And that might be true, but we'll see. The next one I wanted to show you was Google. This is one of my favorite companies. Well, Google and Amazon both are my favorite, and Google is actually trading up here right now. It's up another 70 points, but if you'll take a look at it here, go back and look what happened when Google gapped up another 100 points, back in July. What did it do? It came all the way back down. It dropped 160 points down to fill the gap and then back up again. And here again, we're going to be seeing another one of these big 1, 2, 3, 4, 5 expanding triangle patterns. So don't get too excited here today. Wait one day if you want to buy it. We're up 8 days. This is not the time to be buying, but what do I know? Go back to using a 200-day moving average and everything will be okay. The market does look a little bit overbought today as we come into it. I wanted to talk about the cash S&P because we're going to hit this 786 this morning without any trouble. This is one that we've been saying there was a possibility we could get to this 260, 2060, 2070 level in the S&P, and that's about it. And someone said, that was Tudor Jones. He said, lose your opinion instead of your money. That's correct. Well, I'm not putting any I'm not putting any money on my opinion here. I'm going to wait a day. Basically the euro has been the easy one. Look at the euro last night, folks. It makes a small ABCD correction and drops 150 pips. Those are the ideal kind that you want to be looking at. Okay, we got a caller from Florida. David, are you there?
Yes, sir, Larry. Good morning. How are you?
Good morning, David. How are you?
I'm doing all right. You sound like you're a little under the weather, as they say.
I've been fighting this thing for, probably a couple weeks now, little by little, but it's eventually going to go away. I feel better today than I did yesterday, but I'm okay. What can I do for you, my
Well,
friend?
you could have my problem. So you're dealing with a physical illness. You could have my issue, which is mental illness. It just kind of rolls on, day after day after day after day, and then you go to the doctor and you hear things like, "I'm just a doctor, not a miracle worker," and stuff like that. So, anyways, it looks to me. I'm looking at the natural gas charts here, and I'm looking at the November contract, which is going to roll over to December here shortly. It looks to me like this is completing several A, B, C, D down patterns, and I was wondering if you're seeing what I'm seeing.
I sure am. David, I've just posted into Tiger TV the natural gas. We had Bill Koval on last week, and he was looking for a potential bottom in this contract. And of course, the market had rallied 8 quiet days up to a 382 retracement, and then, of course, broke really hard. And now we're almost at the 1.618 expansion. Gas was trading at 233 this morning, another 2 cents around 231. That's where I think it should hold. Now, this is one of those situations that if you buy it there, you've got to put a 3-cent stop on it, because these markets, when they move, they can go far beyond some of these numbers that we look at. But the pattern is complete. We have a butterfly pattern. We have several expansion numbers. Everything's pointing to 2 cents lower, around 230, 231. And so that's what I'd be watching. But like you mentioned, that contract is getting ready for expiration, so that people should probably be looking at the December contract, and if they want to, they could look at the ETF for natural gas, which is UNG, and that's another one that looks very, very similar. It's doing the same type of pattern, of course.
Gotcha. Yep, that's what I was seeing as well. And okay, I appreciate the call, Larry, and enjoy listening to your show quite a bit.
Hey, thank you for calling in, David. I appreciate you calling. Good luck to you.
Thank you, sir. Take care.
You bet. Okay. Now we're going to take a quick look here. Uh-oh, something's happened to the sound. Oh, I think we're okay. Okay, there we go. All right, now we are looking at the, we looked at the cash S&P, and we said that we could get up here, and we will get there on the higher opening today, because it's gapping everywhere. And these huge gaps will be filled, folks. Otherwise, you turn in your technical pencil, and do something else. But go back and look historically about these big gaps, and they will be filled. This is a mirror image of what happened on March the 5th of 2009. We have market has hit a perfect storm. About the only thing else could be is the Fed drops interest rates again. That would be another one. Or say they're not going to raise rates until 2038 or whatever it happens to be. But they've been hit very heavily with these earnings, and the markets react, most violently. And when the earnings come out, this thing does not go up 70 points by 1 or 2 points at a time. It just opens 70 higher. So, there's no buying or no selling between the price where Google and Microsoft and all these other things close, and they open 10% higher. So you don't have any control over that. That's, this is an outlier event, but that's okay. We'll see what happens. All right, we're going to wait here for a second, and we're going to take a little break, and we'll be right back these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, we're back. Larry Pesavento for TFNN, 877-927-6648 if you would like to call in. Notice that Jeff Bezos made an extra $5 billion this morning, and Sergio and Larry from Google made another $7 billion today. Unbelievable numbers, just a lot of zeros, I guess. Okay, the next chart that I've posted in here is the SDS, which is the double-weighted stock index ETF. In other words, you're going to go long this if you think stocks are going to go up. And all I wanted to do is, this is the same type of chart that I posted in the first chart this morning with the New York Stock Exchange, only it was on the bullish side because it was going up. This is just the reverse of that, and I just wanted to show you that it's been 17 days between crest and trough to trough, so that should be coming in now. See, ordinarily on a day like today, I would be looking to buy this SDS somewhere around point D, but with the fact that we have this perfect storm with the four big stocks with the earnings, it's best to put your hands in your pocket and wait a day until Monday, because nothing's going to change too much from Monday, and maybe there's more perfect storms behind this. You know, that's possibly that could very easily happen. So we want to, just watch this very, very closely. So we'll see what's going on with the SDS. Okay, the next one I wanted to cover, folks, is the Treasury bonds. because, as you know, when interest rates go higher, Treasury bonds go lower, and that's what's been happening today. However, this morning, we posted this chart for the Treasury bonds on the 60 minutes, goes back a couple weeks, and as you can see, we're completing this ABCD Gartley down here at the 156.21 level. So far, the low has been 156.18. It's rallied a little bit from that level, but it's not, not doing anything as yet. That's why it's interesting, to see China, drop interest rates, and yet our interest rates are going higher, both in notes and bonds. There's another factor of, gee, why is that happening? So you have to ask yourself these questions. Whether you get the answers or not, I don't know. I'm just looking at it technically, is that, if interest rates are going to go lower, bonds should go higher. And that's not happening. So watch that also. The emotionalism of the market today is on an extreme level. I don't think there's any question about that. And when you have gaps of 60, well, they're 10% gaps in 4 major stocks, and these are huge. So you have to remember that these gaps will be filled, folks. There is only one gap in the Dow Jones Industrial Average. In all the years that it's traded, there's only one gap, and that was in 1991 in January, I believe. We didn't have overnight trading at that time or anything, and that's when we had the Desert Storm war. And I have to tell you the story behind this because it's really interesting. My daughter Jill was working with me in the office. Bryce Gilmore was visiting me from Australia for a few months. Even Mark Douglas was here for the holidays and stuff. And so we had a full house of people. And that day I had a bearish butterfly in gold and a bearish butterfly in crude oil at $42 a barrel, and bullish Gartley in the S&P. And so I bought the S&P, and I had sold gold, and I had sold oil. And I went to get a haircut later in the afternoon, and Jill called me at the place where I got my haircut, and she said, "Dad," she said, "are you still in those positions?" And I said, "Yeah." And she said, "Well, don't lose your day job." And I said, "Why?" She said, "Dad, turn on the TV." She says, "We're at war." I said, "Oh." So I turned it on, and there it was. We were bombing Baghdad with the laser bombs. Everything was green and yellow. I mean, it was just, looked like a giant Pac-Man game. And I said, "Wow, this is really something." And so I went back to the office, and I started calling the overnight desk, and I could not get through. I mean, never could I not get through. Always somebody picked up the phone. And finally, about 9 o'clock at night, 4 hours later, I was finally able to talk to someone in the New York office. And I asked him, I said, "Where are prices?" And he says, "Well," he says, "what do you want?" And I said, "Well, give me the price of oil." And he said, "There is no price of oil." I said, "What do you mean there's no price of oil?" And he said, "No," he said, "there's no bids." And I said, "What do you mean there's no bids?" He says, "There's no bids at 39, there's no bids at 38. And I said, "You're kidding me. That's a 10% drop." He said, "There's no bids anyway." He said, "Nobody's buying." Oil opened down $11 a barrel the next day, from 42 to 33. Gold was limit down, and the S&P left a gap that it still hasn't filled, and also in the Dow. So just remember that sometimes these news items can, make the market turn. Usually they do, but who knows? Okay, we're going to take a break. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and while we were out, the stock market opened, and we opened higher. What a big surprise. The S&P cash index started beeping on the open. We did hit that number. The number was 207.09. The high was 207.26, and we're 207.06 right now. So we've completed the 786 retracement in the S&P. Also completed the big ABCD from that low on August the 24th. So this is going to be an interesting time. As the Chinese curse says, may you live in interesting times. Still very, very early in the day, and there could be another perfect storm right behind this one. So you don't really know that. So we'll see. Now on the Dow Jones Industrial Average, the cash index itself, the real Dow that's reported, not the futures, but we have a 786, still 100 points higher from where we are right now. We're trading at 17,614, and we could get easily to 17,713. So there's another one that we're kind of watching. But we did hit that number in the S&P cash. I haven't got an open yet on the New York Stock Exchange, but it's going to on the New York Stock Exchange index. But it's also going to leave a really monster gap and get far above the 50% retracement that we have. I haven't even got a quote yet, so it will take 15 minutes to get it anyway. But the 618 on this comes in at 105.89. So if we open up into that area, that's another one that we want to sort of keep an eye on. Regarding the gold, we did rally to a perfect 61% retracement. We went to 1192 down to 1161. The rally back was 1182, and now we're taking out that 1163 area. We're very, very close to that right now. So that means that we could get down below that 1157 level. So the number that I'd be watching today would be around 1153. But now that it's down on the day, 1 second, please. I prefer to wait on Monday just to see, what it's going to do, because I still think we're in a downtrend in these metals, even though we've had a pretty good rally here. Well, it didn't rally that much. It rallied from rallied $20, and it's given it all back in 30 minutes. So you don't have to be too excited about that, right now. So we'll wait and see. So we've got the stock market, quite a bit higher. The Dow's up way over 100. Nasdaq's up quite a bit. And we'll see what happens with some of these others. We're coming down now in the gold. And like I mentioned, I'm not going to buy the 1157 here because that ABCD move measures down to the 1153 level. And I'm not even going to buy that one because of the fact it's a Friday, and we're looking at a really, really steep decline here in silver or gold early this morning, and I would rather stand aside just to see what happens with this. Let's see. This is an outlier event, folks. When you have these monster gaps like we're having, let me check. I want to check to see how McDonald. I haven't even got it. If someone sees an open in the New York Stock Exchange Index, would you be so kind as to type it in for me so that I can see where it is? Because my data is a little slow this morning, and I'd like to see what it looks like. Let's see if McDonald's opened above 111. Let's just check that. Yeah, it did. It gapped higher, 111.72. So that's another one that looks interesting. The reason why I'm laughing, I'm sorry why I'm laughing. The alert just went off for Nike. I have one short position on. We're in the Canadian dollar that's made a great deal of money. And also the only other position that we had two positions for the Fibonacci 24/7, and I was short one of the Dow stocks, which was Nike, and I was expecting to get really hit today, and it gapped down. So now we're in a risk-free trade, which is good. So that's why I chuckled, because it surprised me. I mean, with everything else this bullish, it takes a lot of selling to sell something when everybody else wants to be buying, and we've got to remember that can happen also. Just a second, I've got to turn the beeper off because it's coming down quite a bit now, and I want to just turn this off, and there we go. Okay, got that done, taken care of. Wow, it actually opened higher. Wow, it actually opened higher and broke $3. Well, I was right, it did open higher, but it broke $3. Well, that's surprising. Okay. All right, the next thing we want to take a look at, we talked about bonds, gold, silver, oil. Oil is, we've broken below the $45 a barrel level one more time. We went down to 44.10, folks. This thing's headed for new lows. There's no, there's no way to put it other than that. And that the fact that it is, it's heading for new lows. There's no other way to look at it. So what else can you do? I did have one question about these ABCD patterns, and that is, you can't really expect them to be absolutely perfect at ABCD, because sometimes, well, it doesn't happen very often that it's absolutely perfect, but the bandwidth, in other words, air width on these things is about 1%. So you can't let it go much past the D point of 1%, otherwise you're going to get an expansion, and then you've got to be a little careful. And you really need several ratios together in order to in order to put a trade on. That's that's just common sense, I would think, but neither here nor there. We'll find out if that's going to be the case. It's interesting now. The Dow Jones cash that everybody's watching is continuing higher, yet the futures have already sold off 100 points from where their high was earlier tonight. I happened to be watching Bloomberg this morning when China dropped the rates by half a point, and I saw the prices come across, so I went over to the machine to start to look, and I was watching the reaction, and it was very violent. If you happen to be watching some of these things, they moved very, very dramatically, and it's particularly gold. Gold rallied $10. And I was watching gold, and I saw it get up to that 1182 level, and noticed that it was a 61% retracement of the move down. Then I checked with silver; it was 786, and then they held there for well over an hour. And then, of course, now they've broken $20 in gold, and we've come down to more other levels. But we are seeing deflation, all across the place here, with oil down quite a bit. The metals are still getting hit pretty hard. We're going to break $44 a barrel here in oil very, very, very shortly, and that is not a good sign if you happen to be in long the oil, which you certainly shouldn't be, because this trend has been down, and it starts to once it went below 45, folks, that was the last bastion of support, and all it could rally was 60 points off of that. So that's not very much. We'll watch and see what happens for the end of the day. It's going to be an interesting close for sure, and we'll have an interesting time on Monday as always. But there's always room for another day. Just you have to remember that. We're having these monster gaps in these stocks, and that's not a good thing. I know if you're long these things, it's a good thing. But, remember, these gaps will be filled. And this emotionalism that we're having now is the exact mirror image of where we were on March the 5th of 2009. If you remember Paulson coming on TV and said, ladies and gentlemen, we're going to lose the whole financial system and the banks are going to fail, yada, 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 and it was too big to fail type thing. Well, that turned out to not be the case. And, the banks failing was not the case. So things can change very rapidly. This is the emotional part that you don't see very often, especially when you get hit with a perfect storm like we've had here the last couple of days. And it could be culminating with the Chinese with their interest rate drop, but maybe Draghi will come out and drop interest rates also. That could be another positive. But eventually, the markets are going to settle down and go to where they're supposed to be going, and we'll see. A lot of symmetry in the markets at this point. We've hit those fib numbers in the S&P. As a matter of fact, the S&P cash did not continue higher after it made the fib number. It's actually backed off a small amount, but not enough to write home to mother about. So just watch the close today. If we close mid-range in some of these things, that could be a potential that we did hit some type of a top today. But actually, the day that I was looking for, the next big astro date that we have, will be on the 28th, which will be Tuesday, and that'll be an interesting one. 23rd, 24th, 25th, 27th, 20, yeah, Tuesday, and that'll be an interesting one to look at, from a cyclical point of view. I still don't have an open for the New York Stock Exchange. Boy, they must really be backed up, because I always have an open here in the first 10 minutes. I don't see that as of yet. I'm anxious to see if it gets to 105.89, but that's neither here nor there. We'll watch it as we go through here on some of these things. Okay, next one, let's see, we got gold just touching this 1160 area. One more time, we went down and touched yesterday's low, and that means that we should be heading down to that 1153 level, and I would not I wouldn't even think about buying it up until around 1153, 1151, and I would rather do it on a Friday, on a Monday, rather than a Friday. But if it holds down here at 1153 in the gold for an hour or so, then I'll look to buy it. But I'm not going to have an order setting in there because that's just not, this is not really the smart thing to do. Someone's asked a question about the euro. We talked about that quite a bit, that the longer-term chart on this, I got a price, 10,502. So we want to watch 10,569. That's the 61% retracement on the New York Stock Exchange Index, and that's the one I watch the most. But if we take a look here at the euro, just give me 1 second to put it in here. There we go. And this was 200 pips from where we are right now. Yesterday we were at 112.25, and we had just broken the 786 to the downside when we were on the air here. And we were saying that ABCD move will measure down to 110, and we've hit 110. We hit 110.20. This morning. That's the 1.27 expansion off of that last ABCD swing. So. The euro could find some minor support in here at this 110 level, but longer term, the euro looks like it's heading towards a par. And because each of these highs that we've had have been lower than the other ones, so you just wait for the market to rally, and that gives you a spot to try to pick a rally, and that's what you're really trying to do if you're trying to figure this stuff out. So anyway, that's what we're watching. Okay. We got a lot of stuff going on here, and we'll see how these things are moving and see what other question that we have. Oh, one other question about the timing. There's, all I do is I look at the patterns, I count the bars, I watch some of the things for, the astrology things that I look at to get the best possible, potential entry. Sometimes they work really good, sometimes they don't. And this is just like a baseball player. If he hits 400, he's in the record books forever. And of course, we have to hit at least 50% here on the way up as we moved. I noticed we've had a pretty big range today in Amazon. We went from 635, now we're down at 607. The 1.27 expansion of that was at 618, I believe. I think we posted that in here earlier this morning. So we're going to have some really big volatility today, and then of course next week, because this is the beginning of something really big. But the main thing is we want to watch it today, and then you wait till Monday. You don't have to try to do anything today. Believe me, the market, even if it breaks, it's going to have one hell of a rally, and the reason why is they have scared the bejeebies out of the shorts, and that's really the main thing of what's going on. So we'll see if this is going to be a big thing or not. I'm not sure, but no one else is either. So that's all you can do is to wait and see what's happening. But wait till Monday. You don't have to be a rocket scientist to try to figure this out. And I think that would be. But these gaps that we're having. Folks, just go back and look at your charts. Like Twentyman says, defy human nature, do the work yourself, and you'll see that you're not going to see these gaps, very, very much, and that's what you're looking at. There's a good old Canadian dollar. Got to love it. Okay. The Canadian dollar, folks, is just making a beautiful ABCD pattern up here at the 131.90 level. And we'll see what we're looking at here. Crude oil is getting ready to break into new low ground for the day. We get much below 44. When they see a 43 print, I think you're going to start seeing some acceleration in the selling in crude. But we'll wait and see. Anyway, that's what we have working right now. So live every day in an attitude of gratitude, and I'll see you in a little bit to wind up the show.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're back. Larry Pesavento for TFNN. We've left some pretty big gaps in some of these things. You know, Amazon, Microsoft, Google, McDonald's, they've all gapped up again. So, you know, things are running to the moon, but we'll see how they end up at the day. Just keep in mind that these gaps will be filled. If you don't believe that, just pick up a chart book of any charts you want to look at and go look at them, and you'll notice that these gaps, you'll very, very seldom see one that is unfilled. Usually when it's an unfilled gap, it's an outlier event like a cure for cancer type thing, or something of that magnitude. But that's primarily what you're looking at here. But we could easily go a lot higher. I mean, these markets. I mean, look what's happened to us in just a couple of days here with the earnings of Microsoft and these other companies, and then the Chinese dropping their rates. I don't understand why that's bullish for us, but that's how the market interprets it, and that's what you have to go by. So They could go higher. That's why you've got to wait until Monday. There's no reason to try to come in and do anything crazy today. So it's nothing more than protect yourself, with looking at some of these things. We're breaking down now in the euro, making new lows. That tells us we're probably going to go a whole lot lower than that. I believe 108.50 could be the next level without any trouble at all. And we'll see what's happened. And also the Canadian dollar is up at right near the 61% retracement of this last rally. And as you remember, the Canadian dollar was a terrific buy down there at the 128.10 level. Excuse me, 128.50 level, and now we're 300 pips higher than that, and the whole world wants to buy it. So that's the time you want to sell it to them. You got to buy them when they're crying and sell them when they're yelling. That's what the little badges they used to have at the Chicago Mercantile Exchange in the hog pit. They had little badges that they said in the OEX pits. They had they wore big badges. All the brokers, it said sell an option, buy a Mercedes. So that's the things you want to remember to do. Okay, we'll be taking a look here soon at some of these things. So live every day in attitude and gratitude. God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.